All right, let's pull back the curtain on one of the biggest, most misunderstood parts of the global economy, tax havens. We're going to get into how they actually work, who the real players are, and I'll tell you right now, the map of financial secrecy, it's probably not what you're picturing in your head.
Okay, before we get into the thick of it, just a quick heads up. This is all for educational purposes, okay? This is not, I repeat, not financial or legal advice. So for your own situation, please always talk to a professional.
So let's just jump right in with this quote. It has famously been easier to set up a secret shell company in the US than it has been to obtain a library card. I mean, come on, that sounds a little crazy, doesn't it? Like an over-the-top exaggeration. But what if I told you it's shockingly close to the truth? This really gets to the heart of what we're talking about today. Secrecy isn't just some far-off island thing. It's happening right under our noses.
So when I say tax haven, what do you see? What's the first image that pops into your head? Because for most people, it's a very specific and maybe kind of old-school picture.
Yeah, I bet it's something like this, right? Palm trees, white sandy beaches, some remote island where billionaires and massive companies stash their cash. And look, that's not totally wrong. It's a cliche for a reason, but that's only one tiny piece of a much, much bigger puzzle. Okay, so let's get into what a tax haven actually is. The definition really has two parts. Part one is the obvious one, right? Favorable taxes, low or even zero. But the second part, that's the real secret sauce. It's all about financial secrecy. It's not just about the tax rate. It's about creating a system where nobody can even find the money to tax it to begin with. And that secrecy part is what completely changes the map. The modern world of havens is this incredibly complex global network. And you know what? It's probably a lot closer to home than you think. Yeah, those classic island spots are still in the game, but they're just one node in this giant web.
And again, you're not wrong to think of these places, the Cayman Islands, the British Virgin Islands, Bermuda. These are the OG zero-tax players. Their entire economies are basically built on this model, and they are absolutely still huge hubs for global capital, especially for big investment funds.
But here's the twist. The map is so much bigger and honestly, way more surprising. The Financial Secrecy Index shows that some of the places that are most helpful for hiding money, well, they're actually major developed economies. It's not always about having a 0% tax rate. Just look at this list. This is where your jaw might drop a little. Switzerland, Singapore, the United States, Hong Kong, Germany. These aren't tiny islands. These are pillars of the global financial system, and they are ranked as top-tier secrecy jurisdictions. That changes everything.
Yeah, let's talk about the US for a second. The Pandora Papers leak blew the lid off this, revealing that states like South Dakota, Florida, Delaware, and Wyoming have become global hotspots for secrecy. We're talking about financial privacy laws so tight they actually compete with and sometimes even beat the classic havens like Panama or Monaco.
So how does this all connect? Well, experts have basically split these places into two categories. You've got your sink jurisdictions, think the Cayman Islands. That's where the money ends up, kind of like the bottom of a financial drain. But to get there, it has to travel through conduit jurisdictions, places like the Netherlands or Switzerland. They're like the pipes. They use their complex network of tax treaties to funnel the money from where it was earned to its final destination, losing as little to tax as possible along the way.
Okay, so that's the where. Now let's get into the how. How is this actually done? It's not magic. It's a toolbox of very specific legal instruments.
The first and most fundamental tool is the shell company. And it's exactly what it sounds like, an empty shell. It's a company that exists only on paper. It has no office, no employees, it doesn't produce or sell anything. Its one and only job is to be a ghost, a legal fiction designed to hold assets and hide the real owner's identity.
285,000. Just let that number sit for a second. That's how many companies are registered to a single, unremarkable office building in Wilmington, Delaware. It's not a skyscraper, it's just a building. That gives you a sense of the sheer industrial scale of this.
And usually one shell company isn't enough. For true bulletproof secrecy, you need layers. Think of it like a set of Russian nesting dolls. You set up an anonymous company in Wyoming. That company then owns another company, this time in Panama. And the Panama company is the one that actually holds the bank account or the real estate. An investigator might follow the trail to Wyoming, but they just hit a brick wall that points to Panama, and the trail goes completely cold.
But it gets even more complex. For the ultimate level of protection, you move on to more advanced tools. An offshore trust, for example, is a legal structure where you literally give your assets away to a trustee. You don't own them anymore, so they can't be touched. And then you have things like a Panama Foundation, which is just wild. It's a legal entity that has no owners. None. It owns itself. It's basically a financial black hole, an impenetrable fortress for wealth.
Okay, so as you can probably guess, when trillions of dollars go missing from the tax base, governments start to notice. All of this secrecy has, unsurprisingly, led to a huge global pushback, a crackdown aimed at forcing more transparency. This fight really kicked into high gear over the last decade or so. It started in 2010 with a US law called FATCA, which basically strong-armed foreign banks into reporting on their American clients. Then, the rest of the world followed suit with something called the Common Reporting Standard, or CRS. The idea was simple. Get over 100 countries to agree to automatically swap bank account information with each other. No more hiding.
And the newest weapon in this fight is a global minimum tax. It's set at 15%. The whole point of this is to stop what's called the race to the bottom, where countries keep slashing their tax rates to attract business. This new rule says, look, we don't care where you book your profits, you're going to pay at least 15% tax on them. That's the idea anyway.
So that all sounds pretty good, right? Automatic information sharing, a global minimum tax. So does this mean the game is over? Is the era of the tax haven finally coming to an end?
Well, the short answer is no. Not even close. It's a constant cat and mouse game. As soon as regulators close one loophole, armies of clever lawyers and accountants find a new one. The system just adapts. And a perfect, almost ironic example of this is the US. It demands all this data from the rest of the world, but it doesn't really share much data back. So what's happened? It's accidentally turned itself into one of the world's most attractive secrecy havens for everyone else.
And this is why all of this is such a big deal. The amount of money we're talking about is just mind-bending. The Tax Justice Network estimates that somewhere between $21 and $32 trillion is stashed in these secrecy jurisdictions. That's not millions or billions, that's trillions of dollars in private wealth sitting untaxed completely outside the system. So it all comes down to this one huge question, right? As the world tries to tighten the rules, can we ever have real financial transparency? Or is this deep-seated secrecy just a permanent, unbreakable feature of the global economy? It really is a constant battle, and who wins? Well, that's one of the biggest questions shaping our world right now.